Hey guys, what is going on? Welcome back to the channel. As with every video, I want to thank you guys for all of the support on the channel. All the viewers, all the subscribers, immensely appreciate the support. For today's video, I thought I'd talk about a few companies involved with lithium, either the mining of lithium or the manufacturing of lithium. This is in response to a viewer on the channel wondering if these would be good buy and hold stocks to hold for a longer term with the rapid expansion of electrification in transportation, electric vehicles, as well as a number of home and commercial lithium-ion battery solutions. Would these be good companies to invest in for the longer term? So I thought I'd take a look at a few companies here. First, FMC, as you can see up on screen here, as well as another very large company, ALB. Thought I'd also take a look at an ETF involved in this sector, as well as a company that unfortunately is not traded on Robinhood. That's why I have held this for the last stock to review, but you can buy this on other brokerage accounts. So let's go take a look at FMC first. This is a very large company. This is a diversified chemical company. It has a number of different segments, but one of its larger segments is a lithium segment. Definitely manufactures lithium. I think it's also involved in some mining as well in a certain regard. It has lithium production for a whole range of different products, primarily energy storage products. If you take a look at the graph up on top there, you can see the recent performance has been very robust, but over the last 3 months it is down a bit here, 7.38%. Over the last 1 year, however, you can see very good growth there, 40.48%. And again, over the last 5 years, you can see it's up 42.1%, but a lot of that growth over the last 1 year of trading. If we take a look on the bottom here, it's a very large company, like I said, 11.12 billion market cap. The PE ratio is 20.75. Looking through a number of companies in this market segment, this is one of the higher PE ratios. The average was around 13 or 14. So a little bit more expensive than some companies. But again, it's one of the larger companies involved in lithium manufacturing anyway. Dividend yield there, a bit of a dividend yield, but not that great. Q4 earnings 2017, robust earnings there, as you can see on graph, that are over 1.15 per share. And again, on the bottom here, it has a brief overview of exactly what this company is involved in. So this stock here may have a buying opportunity here, being down 7.38% over the last 3 months. But let's take a look at another company that has a similar type of business here, ALB. This is also a very large, diversified company. Specialty chemicals, has a very large segment devoted to lithium mining as well as manufacturing. Again, just as with FMC here, you can see recent performance very good here, but the 1 and 3 month performance is down a bit, so possibly another buying opportunity. Over the last 1 year of growth, this one is down a bit, and over the last 5 years, you can see an okay growth pattern, but this is definitely lagging behind the overall S&P 500 during this turn. And again, on the bottom of the screen here, you can see the statistics for the company. Very large company, almost equal to FMC there with regards to its market cap, 11.06 billion. The PE ratio on this company is very, very high, 220. Again, compared to FMC here, PE ratio of 20. Again, the average, not quite sure if this is across the entire sector, but it's around 12 to 14 or so, in that range anyway. So this is a very large PE ratio here. Dividend yield is a bit higher than FMC, but only 1.001% on its last dividend payment. Earnings Q4 2017, very good as well, just as with FMC there. You can see the actual earnings per share, 1.34 per share. And again, on the bottom here, a brief overview of exactly what segments this company is involved in. Again, it's a very large and diversified company. So these are the two larger companies that are traded on Robinhood here that are involved in lithium manufacturing. I also took a look at LIT here. This is an ETF. On the bottom there, you can see this is tracking market cap weighted index of global lithium miners and battery producers, of which FMC and ALB are a part of. You can see this is a smaller fund here, 994.86 million, PE ratio 41.415, dividend yield on the bottom there. And again, if we take a look at the graph here, last 1 week up a bit, 4.24%, last month 4%, but over the last 3 months here, again, as with FMC and ALB, there may be a buying opportunity in this market segment. Over the last 1 year of growth, 36.59%, and over the last 5 years here, 27.61%, again, with most of that growth over the last 1 year of trading. And then just for another analysis here, SQM, again, you can't trade this on Robinhood. This is a company from Chile. I just wanted to kind of compare the graph here. You can see this is also a very large company, $6 billion market cap, a bit higher dividend yield, and the PE ratio of 30.465, definitely above average. The earnings on the bottom there you can see are not as good as with the other two companies. If we take a look at its graph as well, over the last 1 week, 6.75%. 1 month, stagnant growth there, 0.12%. And again, just as with FMC, ALB, and the EFT LIT, this is down a bit as well, 4.28%. But over the last 1 year, very good performance. And again, over the last 5 years, 11.39%, with most of the performance over the last 1 year of trading. So there may be an opportunity to jump into these stocks. Out of these 4 different stocks here, on Robinhood anyway, SQM you cannot buy. And out of the 2, ALB and FMC, I do believe ALB is a stronger buy here. But there was some concern about oversupply in doing reading about lithium companies. Apparently, these companies don't really have a durable competitive advantage. Lithium is very, very common in the Earth's crust. It's very easily mined. So it's very easy for other companies to jump into the space and essentially provide supply for demand. So there may be a very large demand developing, soaring demand actually, but the lithium supply will outpace that because it's very easy to jump into the segment and it's very easy to generate supply for the demand. So that is one of the reasons these stocks have pulled back over the last 3 months here. 7.38% for FMC here, 23.4% for ALB. And again, this is why I think this is a stronger company to jump into. Buying on this dip here, if there is a reversal in the price of these stocks in this market segment, I do believe you'll get the most return out of ALB here. And again, I just want to point out, I'm not a market professional. This is simply what my analysis is telling me. And I am just an individual investor. This is kind of what I'm thinking about when jumping into stocks like this. LIT as well, 5.71%, and SQM here, 4.28%. So this may represent a buying opportunity, but again, a lot of concern about durable competitive advantage of these companies. It's very easy, apparently, to jump into this market segment. It's very easy to mine lithium. It's not like mining gold or platinum or some of these other precious metals where it takes literally billions of dollars of infrastructure to start mining. Much easier to jump into the space. So please take that into consideration when thinking about jumping into these stocks. So to answer the viewer's question, not quite sure if I would jump into any of these stocks. If I did jump into any stock, it would probably be ALB here. Again, just because it's a very large company, $11.06 billion. It's a diversified company. Not all of its earnings are tied to lithium. And it's also a company that I think would have the best rebound with the stock dropping 23.4% over the last 3 months. So that is the analysis on lithium stocks, either the manufacturing or the mining of lithium. I do believe there is a potential for a very nice long-term buy and hold opportunity. But again, based on the reading I've done, it seems like there's not a very good durable competitive advantage in this particular market segment. It's very easy for other companies to start supplying the demand. And if that happens, the price of lithium will drop and the potential profit that these companies make will drop as well. So let me know if you guys agree with that assessment or not. Please let me know why you would agree or why you would not agree, if there's anything that I missed in this particular market segment. Again, just doing some reading about this. Definitely want to thank that viewer for this idea. Very good idea. Very good potential investment. But again, not quite sure over the longer term these companies will maintain their durable competitive advantage. Even if they have one now, not sure they would be able to maintain that over the longer term. But let me know either way what you guys think about that. Or maybe there are some better stocks in this market segment that you would jump into rather than FMC or ALB. Either way, let me know. Not to make the video too long, I'll kind of end it here. Again, if you guys have any good video ideas, any comments on this video, other videos, please let me know in the comment threads down below. I'll do my best to get back to those as quickly as I can. All of the video ideas that are given to me, I put into a spreadsheet, and the goal is at some point to get those videos put out. So I definitely apologize if you have mentioned a video topic and I have not yet put put a video out about that. It is on the list, and I hope to get to that sooner than later. So let me know either way. And not to make the video too long, I'll kind of end it here, and we'll see you guys next time.